How's it going, everyone? This video is going to be over how I enter trends. And the first thing I want to say is how I define trend. And the way I define trend is an aggressive move reaching towards an objective. So for example, we have a 4-hour point of interest or order block up here. And then later in the day, we have the daily order block we are reaching to. So if we get aggressive price action reaching for those areas, that is where I will be looking for trends. And ideally, you don't want to see many pullbacks when price is trending, but I will show you how I enter. There are 4 ways I look to enter trend. And on the top here, we have the bullish options, and on the bottom here, we have the bearish options. So I will go over each one of them, and then we will go search for some examples. So in a bullish trend, if I am looking to get long, I want to see some sort of inducement setup where we raid stops, move back into the range, and then I will look to get long to target this high or a further objective. Similarly, with the bearish option here, I will look for a high to be ran, return back into the range, and then target low or a downside objective. So that is option number 1, or inducement. The next option is a mitigation block entry. So essentially, when we put in a down close candle in an aggressive trend up, when this high is invalidated or broken through, then I will look to take an entry when it retests the high or the open of this candle with my risk at the low of this candle. So it would look something like this, wherever we're targeting, like that, or like that. And similarly with the bearish entry here, the entry would look something like this, or this. Now what I have noticed when watching trends play out is if I'm assuming this is going to become a mitigation block, why wait for the break of it to enter? And so sometimes I will take what my friend Austin named as a cheat code entry, and essentially when this candle closes right here, I will just enter long. So buy the open of this, and I will look to have a stop at one point or wherever I feel need below this candle, the mitigation block, and that will be my entry there. Similarly, on the bearish side, when this candle opens, I would take a short position, risk one point above here, targeting a lower objective. So the next and final example I use is I will look for these mitigation blocks and then go to a lower time frame, such as a 15 or 30 second, in order to search for a lower time frame model or fair value gap setup. In this first example, we're going to go over an inducement setup where we have a high in a bearish trend that is not displaced over, which allows for an entry short. If you notice, we have a trend here. We start to move up. Where do we put in a high? Right here. So we mark out that high. If this trend is going to continue and not return to this high, we want to see displacement below this low. As we fail to displace below this low, it's likely we're going to see an OTE of this range or this high. So if you notice, we reach up to this high. If I'm confident in this entry, I will take a turtle soup entry, which is essentially shorting above this high with a fixed stop loss, expecting more downside. Otherwise, I will wait for this to close back into the range and either take that entry when it closes back into the range, risking this high, or a lower time frame setup. So for example, you notice we cannot close above here. What I will do is I can just short this with a stop on this high, first target these lows or whatever objective you are searching for. That is one option. Another one I want to throw in here that I didn't mention in the beginning was fair value gaps. When price is trending, there are going to be lots of fair value gaps. However, I don't want to take entries directly off of fair value gaps because when price is trending, you're likely going to have very wide stops. So in this case, I will go down to lower time frames. So I have the 5-minute fair value gap marked out, and I will watch the lower time frames. In this case, I'll watch the 1 minute, but with the 1 minute, it's likely not going to give a model until later, and I want to catch it down here, so I'll go to even lower time frame, such as a 15-second chart. And those of you that follow me on Twitter, you will see this as I recorded it live, but we wait for some sort of model and aggressive price action out. So for example, we have an aggressive move down into the fair value gap that takes these lows, and an aggressive move out as well as this previous low being ran. So I will look for an entry using this box setup right in here with a stop on this low and then targeting this high. And if you notice, a 4-point stop is a lot more preferred than a 16-point stop for me. So then when you get this retest and price goes and hits the target. That is one thing I wanted to throw in before we get into our next examples. For our next example, we are going to use the price action after we tap into that 4-hour order block. I was wanting to see a continuation of this trend a little bit higher, thus giving a long inducement entry here to reach into this high before then giving a model lower. We will see what happened. We did end up taking this low, failing to displace above it. However, these next two candles were a telltale sign. We couldn't displace back up to reach for this high, and likely we're going to fail right in here. So after seeing that, it was confirmed after these large displacement candles here, and then to complete the sell model, we wanted to reach for these lows down here. Knowing that I want a reach for this low, and how aggressive this price action is here, I knew it was unlikely we're going to reach back up in here for an ideal entry or an OTE entry up into this range. Knowing that, what I can do is look for mitigation blocks. So for example, you wait for a green candle. So if you notice, this is a green candle and it closes. If we break this low, that is a mitigation block, and this high should not be invalidated. So what I can do is either wait for a retest of this or take the break of it with a stop there, right? And then I would want to reach for our objective. So we will see if it gives us that second entry, which you can see it did right there, and that would play out. So let's say you missed that one. What about this one here? Similar concept. When this low is broken, then this high should not be invalidated. And unlike this one right here, where it is very small body, and I'll use the wicks, when price is more clustered together here, I will use the opening price. So on this one, I will look for an opening price entry right here on the next candle to then target our objective once again. And we will see if we get it, right? So there we go. And we hit our objective. With that covered, we are going to do the same thing, but look into what I call the cheat code entries. So when you have a green candle here and it closes, I will sell the open of this next candle, which is usually right around there, with a stop 1 point above this high, targeting once again that lower objective. And if you can see, gets you in with pretty insane risk to reward. Similarly here, I will sell the close of this, so this open, with a stop 1 point above there, targeting that. And you already know it hit that low. Let's say I don't want to take either of those entries. What I can do is use these mitigation blocks and look for lower time frame fair value gaps within them. We have fair value gap setups right here, as well as right here. Knowing this, I can short when we reach into this fair value gap with my risk right there, targeting the lower objective, and similarly here, target when we reach into this fair value gap, I stop on this high, targeting the lower objective. I hope this video helped everyone out. If it did, please consider liking and subscribing, and thank you so much for watching. Have a great day.